Hello guys, welcome to the Trading Parrot. Today I want to look into the stock market. The reason is because there's a FOMC meeting, S&P, NASDAQ are at critical support. So I want to do a recap of where we are with the stock market, the indexes, and what's the potential for a bounce at the current levels, not just the S&P, but also the NASDAQ, the Russell 2000. I'll be looking at the DXY as well on the weekly and on the daily. I'll start first with a recap on how we perfectly time the top on the NASDAQ thanks to the price action of Nvidia. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit that notification bell, and if you feel like supporting the channel, watch this video until the very end. Do not go anywhere without leaving a comment down below. Those two things are really helping the channel to continue growing. Instead of showing you the live chart, I'm gonna go and show you some tweets that I shared in the past. This first tweet was shared on the 20th of June. Ugly closing candle for Nvidia. Reversal potential is currently considerable. We could be going to 110, and if it plays out, the S&P 500 should follow. Here's the chart of Nvidia on the daily, and the 20th of June is the moment that we lost the trend line. If you've been following my channel, a move like this on the RSI from one end to the other, respecting multiple times the trend line, is what I call the golden entry on the RSI. And even though there was a breakout here, this was a very small, but we started seeing confluence of multiple factors showing exhaustion in the parabolic rise of Nvidia. This came together with multiple times being below the trend line and barely managing to go back above. Yes, there were some higher highs here on the RSI, but with a way smaller magnitude than what we were seeing at the beginning of the rally. The day I posted, we also have our massive red engulfing candle. Following those days, we had a little bit of relief here, but you can see that the RSI never made it higher than the breakout point, indicating that we were going to have continuation to the downside. And why am I looking into Nvidia? Because Nvidia is responsible 100%, or at least most of the chunk of the run, the S&P, and in general of the stocks throughout this year, what people call the AI rally. Nvidia and AI has managed to keep the S&P in positive numbers, while at the same time, many of the stocks of those indexes have been given very humble numbers, if not negative ones. And you can see that most of the other big companies in tech follow with what Nvidia did with some delay. For example, Google did it on the 11th of July, Amazon and Tesla. Notice that on the 20th of June, the red candle of Nvidia caused the NASDAQ to print this red candle, which is not as significant as the one that we saw on Nvidia that day, but still responsible for seeing the breakdown of NASDAQ. I shared this on my Twitter the same day that it happened, so make sure that you're following me. My handle is Trading Parrot. Right after that, we went into a very annoying situation, which is after the breakdown, the RSI starts coming back for the kiss of death against the trend line. And on the 11th of July, after monitoring this move on a daily basis, I published on Twitter and on my video of the day before that I was expecting this to potentially become the kiss of death. And that forecast became truth with a strong rejection on the NASDAQ. I say carefully here on the 11th of July because if it gets too big, the correction, it can drag everything down. Fasten your seatbelts. This was seen by only 500 people, and I wish it was seen by more. Because right after that, the NASDAQ, even though it went slightly higher here to 20,000.5, it has made a correction of 10% since then. So the question is, we had the FOMC meeting today. We are right at the support on the NASDAQ. You can see it here. This is weekly trend line. We have the same setup on the S&P. So are these indexes going to actually bounce once again after the FOMC meeting? Or am I seeing that we are actually going to break down here and continue into a massive sell-off to the next trend line? That will mean that the correction of the S&P could move from being barely 5% into a 15%. If we look at January 2022, we have a 26%. But supposedly we are in a bull market. The opinions currently are quite divided among investors between being in a recession, entering a recession, we are fine, we are in a bull market. If we look at the weekly RSI, we can see that is currently this week below the support. So if RSI was to behave as usual, this is an indication of weakness. We also have bearish divergences accumulation right at the top. So there are some odds of a breakdown on the S&P when looking at the same chart, but on NASDAQ, we can see that on the RSI we are still holding the trend line of support. And as I mentioned a few days ago, if we were to hold this support, we could make a full bounce from here to the top of the range on the RSI. Once again, this resistance that is lasting for many years where we never cross above 75 on the weekly. Incredible. But if we were to do something similar, that will take us to an RSI of 75, which currently will give us a nice ride of 21.3% in the NASDAQ. All of that, of course, subject to the price and the RSI holding this support. And that's why I think the FOMC today plays a crucial role on where are we going next. There is a potential for the NASDAQ to follow with what the S&P has already done on the RSI and potentially start breaking this weekly trend line that we see in here. And you might be sick and tired of me seeing head and shoulders everywhere, but on the weekly RSI, on the S&P, I tend to see here some sort of deformed head and shoulders. At least the main nature of it is there, right? We have the left shoulder, the right shoulder, and a larger push here in the middle, which coincides with this price action here at the bottom. Let's have a look at the VIX of the S&P 500. We can see that from 2022, the volatility has been coming down below this resistance on the weekly. And a few days ago in a video, we were talking about the potential for this to break out above it. For those unfamiliar with the volatility index, typically when you break above a trend line like this is because there is a massive market crash. Only a market crash can move the volatility in a spike so big. Typically, low volatility comes with the market slowly coming up, at least when it comes to the indexes. So what I'm expecting to see at this range eventually from today to end of the year or possibly 2025 is the actual breakout of this. And that should come with some big correction in the indexes. As you can see in the whole history of the VYX, there's not a single exception where you stay at these levels forever. That's impossible. So maybe this attempt is just going to be one more of this, but you can clearly see how the ladder is coming lower and lower in getting constricted. And eventually it's going to get into March of 2025 and it won't have any other alternative than to shoot up any high. It doesn't necessarily need to be higher than COVID, but it could be anywhere at this range of 48. The last time that we were there, it was February of 2018. If you remember what happened there in the market, there was a crash, 2015 as well, and the highest here is in 2008, where we reached 96 in the volatility index. One alternative hypothesis I have is that potentially the top tech stock markets may continue to bleed for a little bit longer and continue with the rotation into the smaller caps. At the moment, S&P and NASDAQ smaller caps are way cheaper than the top tech stocks, and people are starting to notice that and trying to hedge against these very overbought stocks at the top range. If that was the case, then the Russell 2000 may continue going higher. Just be conscious that where we are at the moment is quite a level of resistance. This 2000.3 has only been breached at the top of the bull market in November in 2021. That was the previous all-time high of Bitcoin, the S&P correcting and Bitcoin running higher. That is just these two different asset classes that are going back into the mean since they typically behave in a correlated way. And only in the past months, the S&P was running up thanks to the AI rally, and Bitcoin was still going down. So at some point, they needed to catch up. Let me know in the comments what you think is going to be the effect on these assets from the FOMC meeting. The expectation is not to do any rate cuts today. At least there's less than 5% for that. I can definitely tell that it's going to be an interesting one, particularly when they talk about what's to come for the next months. We already see that the expectations for August and September is to get started with those rate cuts. Guys, I'm currently running a position and drop on Bybit. The instructions are at the top of the description. You can get 500 if you trade with 100. Have a look at my referral link for Bybit. If you open an account using it, you can unlock up to 30,000 in rewards. Thanks so much for watching the video. I'll see you in the next one. Bye bye.